Welcome. So we just got ECB interest rate decision and held rates active. Euro fell a bit, roughly 20 pips, up 10 pips from the already. Not a lot to chew on. This was widely expected. Only some small reaction. The big one is coming up in 10 minutes now. 10 minutes. CPI. Note here that ECB rate decision, if it's widely expected as it was right now, usually a fade in press conference, which is coming up in 24 minutes now. But as I said, in between we got the US data, US CPI, and weekly claims. Today, not a lot to all eyes today on goods prices, which is expected to be more vulnerable against the tariffs, which in turn should see them rise a bit more than service inflation. Euro dollar is coming back already. $15 of those 20 pips did fade, and we still have 5 minutes left for the last bit. We should come back here to 850 before we get into US data. So the question now is, should I just fully risk the whole account just on the data? Should I just go all in before the data, or should I trade normal high risk after the? Maybe just to get an idea of the plays that could play out today. If we get strong CPI reading around 0.35% change on a month for a month on the core, which is likely going to be the most important number to look at beside super core, which is something many investors and many banks and institutions are currently looking at, just to strip out the head of the inflation, right? They just want the lowest possible thing. So if we look at the core and we get something like 0.35, maybe even higher, then it's very likely that we get some bond selling of and a repricing move for the end of the year on the rate path. Also for next year, probably getting removed those remaining 10% chance for a 50 cut in September. That would lead to dollar spiking quite a bit if we would get, and maybe risk sentiment falling as well. I mean, more hawkish repricing would very likely mean some risk selling as well across the board, especially in the growth sector. So we're talking about Nasdaq, tech sector. A bit more supported would be industrials, stuff like that, who can cope with higher rates a bit better. If we get a softer reading and we're talking about 0.25 on the core month for month, we would likely see bets forcing closer to 25%, maybe even 30% chance of a 50 cut in September, and more cuts, or fully pricing in 3 cuts for the end of the year, and then further down the road some more as well. So bond buying quite a bit, dollar would sell off quite a bit probably. Not sure if the current positioning is overly bullish on the dollar or if it's overly bearish. I think it's more or less neutral from here. It has been quite bearish last week, especially after NFP, I would say, but as you all know, that faded quite a bit from a break out of the weekly range back into the range now. So positioning is probably somewhat neutral right now on the dollar. So we have 20 seconds left. Danny said I should go all in. Let's just do that, right? Go all in. What, 6.5k here? 3, 4, 5, so that's pretty much all in. Close to 20 lots. Now we go. Go down. Yeah, that is sweet. And it's going back up. Interesting price action. Dolly and flew. Now setting off. This any account is gone, nearly. I don't know what the numbers are right now. The weekly claims are, oh my god. Okay, so we have CPI, core. We have CPI headline at 0.4 month for month. We have the year-over-year core 3.1 as expected. We have actually strong numbers. We have continuing claims strong, but the problem right now with the dollar is taking away the spotlight from CPI a bit, is weekly claims 263k. That is quite a bit. So that is why everybody thinks this is no bueno on the labor market. And this is why we see this this strange price action. First the spike on CPI and then the dip, quite big dip on the dollar on the weekly claims. They're really bad. So that is no good for the dollar right now, and this is why the account is gone. Andy said I should go all in. We are. So and we have the core 0.3. I can find the unrounded number. The initial claims is really a bad reading. Looked so good in the first couple of seconds. Let me see. Where's so now I can only find the rounded number. Demo account? No, I'm not. Never trading demo account. No. No bad numbers. Dollar selling though. Yeah, no. It's the weekly claims. Remember, guys, the fear is not that inflation is coming back up currently, but the fear is that the labor market is falling off a cliff, and the current numbers are not really good for that narrative. I mean, 360, 263k on weekly claims is quite bad, and quite a bit of a rise from last week and last ranges. This is why we see that pricing, and not because we have solid CPI. Not mix things up it. And just to get you warned, guys, as well, we have 10 minutes, 11 minutes left until ECB press conference up as well. So for unrounded, month for a month is 0.346. So that is really close to a 0.4 reading on a rounded number. The prior month was 0.2028 unrounded. So actually the month for a month core reading is quite high, and just slightly off 0.4 reading on the rounded number. Yeah, that is actually a bit hawkish, but as said before, the weekly claims is what's really killing this trade right now. Yeah. Still going right now. Dollar yen is back red on the day at 147 300. Look at bonds flying though. This is crazy, right? It's pretty much all across the board. The short end is more affected than the long end, which makes sense, but thing is, yeah, so the 10 years down 4 basis points, 2 years down 6.5, and the 30 years down 2.5. So this is actually, in my opinion, pretty much an overreaction, because it's, you know, it's one weekly claims report. We all know the labor market is losing up. Is it falling off a cliff? I would probably not say that. I mean, sure, it doesn't look good, but remember we had some bad weekly claim numbers in the past as well. Just to turn around. Continuing claims are getting better. So I don't really see the reason for that reaction. On the other hand, it's just 30 pips across the board, more or less, except for UJ that was like 50. But the bond market is turning quite high. Let me check. So we had in June we had readings of 248k and 250k in consecutive weeks on the weekly claims, and then fell back all the way to 270k in the coming weeks in July. We had one outlier in October last week, 260k as well. We had 225k the week before, then 260, and then fell back to 218k in the weeks after as well. I would not put too much emphasis on that 263k because it could just be one outlier. I mean, we've been pretty stable between 230, 235k for the last couple of weeks. May just get better weekly claims this weekend and everything is off the table again. Yeah. So my best bet here would be to fade the move after the first 15 minutes, as always. That is 6 minutes away and into. The problem is we still have the ECB meeting, ECB press conference coming up, which is going to be coming up in 5 minutes as well. Sorry. So we might just fade this move into the press conference. May hold up here and then fade it. I would not bet on this move. CPI was too strong for that, and the weekly claims are not that important. But we'll see. There's a reminder in the chat. 5 minutes. Press conference. And by the way, Lagarde doesn't really have any option but to be a bit more dovish this time around. So yeah, let's check back on the account a bit. Currently trading at 1.8k, been as high as, I don't know, 8k, something like that. It's down quite a bit again, but not dead yet. Back up. That was not too good, Danny, to go all in. Started out good. If it would not be for the weekly claim. I would honestly say if it's not for the weekly claims, UJ would be bound to go to 150 and above again. And as I don't think that weekly claims matter too much in the little bit longer term, I would say UJ is bound to go up there. That's 250 pips into the FMC meeting probably. Check on expectations. So the chance for a 50 cut in September fell. We're now at 5.6% right after the data. And we're getting more dovish for the year end, only pricing in 3 cuts. 76% chance for 3 cuts till the end of. We're getting more dovish on the long end and a bit more hawkish on the very, very short end. See if we can fade this move and then probably a nice reaction on the ECB. Bring this back. Well, right. Not 17 pips to fade. Back to 8. I just need that move down. So three cuts for the end of the year. I don't think that is coming. I think it's gonna be 2, but may as well just be wrong. The problem is the Fed wants to avoid any unnecessary volatility, and that with everything it needs, and probably more. So the problem right now is that even if the data is not calling for 3 cuts, if the market is pricing it in, Fed might as well just go for it to avoid unnecessary volatility. Because if they would not deliver 3 cuts, the market is pricing it in, then the market would just go nuts. So we either price out the 3 cuts down to 2 cuts, or the data is really calling for it. At the moment I don't see it. I mean, I see 1 cut, yeah, of course, obviously labor market is losing up, but if you look at inflation is on a rise again. And even if you say it's a one-off effect from tariffs, I mean, it's still there, right? And we all know what happened 2022, 21 and 22. Inflation came up quite a bit. The Fed fell way behind the curve as they held rates way too low for way too long. And it's kind of funny because this is more or less a worse setup than we had back then. Because if the labor market is really losing up and you cut into rising inflation, may help the employment, but you get really bad inflation afterwards. I mean, it is on a rise already, same as it was in 2022, but instead of hiking as you did in 2022, you cut down, right? So this could actually be a bit worse than we had it back a couple years ago. Well, let's just hope inflation is not getting out of control. Areas are really a fact, and the Fed holds their line and keeps rates a bit steady for these. Else the whole thing could get really. Still have 15 pips to fade the move. 15 lots now. This is probably the maximum I want to go. This is will be like 50 pips. Get back to around 9k. Roughly 116,500. Get there and we're probably close. Not the lows of the day. Okay. So the long end did pull back nearly all of it already. The short end is still up a bit, but did pull back most of it, like half of it. Yeah, the bond market really thought, okay, this is an overreaction, we need to pull back a bit. US dollar traded most of it already as well now. Not all of it, most of it. I got his life as well, talking already. As I said, I'm long dollar yen from 147.500. Got an entry there. That's what I'm holding now. As I said, for probably 150 into the FMC meeting. I hope we're gonna get there for the FMC. But I would not mind holding it through the FMC either, because they're gonna cut 25 basis points. It's gonna be a hawkish cut. If they're gonna be 50, it's very likely a very ugly dip in the dollar, followed by intense buying. So I think the downside here is really limited, and we're kind of lowest you can get probably on the dollar anyway in longer term. Just need to keep your risk in check. Okay, I'm gonna turn off the desktop audio so I can listen into Lagarde now. It's not yet the Q&A. There goes the account. There we go. The guy is not saying anything important at all. Getting to positions here on the dollar yen. We're not going anywhere here right now. Dollar yen still flat on the day. Overall, dollar moves are still small on the day. Euro dollar up 0.20%, pound 113, Aussie 117, Kiwi 111.11, sorry. Dollar cut unchanged, dollar yen unchanged, dollar franc with C 0.21 minus point. It's just small moves, roughly 20 pips across the board, or smaller. There's room to roam. Q&A started. Once more adding up positions on dollar yen. 47,480. Dixie touched the low from yesterday. Oh fuck, the account is gone. I have some fake breaks across the board coming up now. No fake breaks yet. Julian is going lower and testing the lows of the mark as well. Should we deposit some on the account? Currently at 200. Get it back to 2.5k. So there are breaks coming up. This is why I wanted to This is fake brakes. Leon is slowly pulling up there, trying to get above the 147,500 again. Neutral is pulling down there. As I said, setting up fake brakes. But yeah, going again. Yeah. 15 minutes till we have New York. Bring some fire in there. Small breaks now on the dollar yen to the upside. Once again, increasing my size on it. Please don't mix it up, right? If you're new to watching this, the account you're seeing is just a fun account to have on a live stream, but I'm also trading on the big accounts, on the normal accounts, on the main accounts on the side. So I'm obviously using some risk management. I can increase the size quite a bit because I'm not going all in all the time. When I say I'm adding on the positions, I mean on the main account, right? Lagarde is still not saying anything relevant, so we should really fade back the move we made since the CPI, and I'm probably going a bit further than that. I like this price action now. Close to risk level obviously is this one now, 147,750. And I honestly think if go up there and break it closer to the turnaround moving average well and weekly pivot, we go above it. I honestly think we can even go up right here today. Probably putting closer to we go. Can't go. Can't go just yet. New York Stock Exchange open. There is really not a lot to take away from Lagardère. Neither from price action. We're just going a bit sideways here. We had a little fake break. Could not make some follow through on that fake move. Come back higher or lower on the USD again. We're probably trying to break the lows again now on the dollar, on the Dixie. Eyes on the daily S1 at 97.623. And the low of yesterday at just below it, 97.596. So roughly 97.6. On the upside now we have a nice level to break at 97.750, which should get us back to 98 if we break it, which is close to the daily highs, and then daily high at around 98.86. We're trading red for the week, by the way. We're below Friday's close on the Dixie, which is right around the 97.750 as well. Monday open was slightly higher, 5 pips gap higher, as you remember, on Friday. 97.8. It's actually very close to the daily open as well. We're back at 10% chance, by the way, or 9.2% chance for a 50 basis point cut in September next week. 75% chance now for 3 cuts till the end of the year. 1 year out. So September 26, we're currently pricing in 6 cuts, 150 basis points down to 3%, 29% chance, 27% chance for 5 cuts. End of 2026 sees 6 cuts priced in as well, 150 basis points, and chance for 5 cuts, 20% chance for 7 cuts. 2026. Dollar is falling back to lows, as I said. 5 pips away now from the 97.6 low. Fell into support area. Euro dollar once again back to the 300 level, which was the high yesterday, and we're pulling off that. Looking good. Dollar yen off daily flat level as well again here, like 5 pips. Bonds are pulling back up again a little bit, which is why the dollar is struggling a little bit and not yet breaking higher. Still quite a boring price action, honestly. We are not really gonna. That was it for the press conference of Lagarde. Pretty much no news. Really boring press conference. Overall, a pretty boring day, honestly. I expected way more. I mean, dollar is down roughly 35, 30 pips on the Dixie. We're up like 50 pips on the euro dollar. Roughly 28 pips on the cable. 22 pips on Aussie. 42 on dollar yen, and that is pretty much it. The biggest mover really was the euro dollar. I mean, obviously with the ECB as well, but those are still not huge moves, right? I mean, that's an okay move for CPI, but all in all, 40 pips on CPI, weekly claims, and ECB. There's not a lot. There's a lot. Now we're on the low side again. 27.61 on a Dixie. Way back at 147,400. Dixie is back down at yesterday's low. 29.6 as full critical level now. Can pull off one more fake move before we go into dollar yen now back again at the daily pivot point 147,400. I have to run in a moment now for sports, so I'm just gonna let it be as it is. As I said, not a lot of action. I'm happy with my positions on the dollar yen in on the main accounts for fade back higher and into the FMC. Still think the pricing is dovish. I'm also going to sell some euro for like probably right here 17,300 right off the high 50 minute 80. That is a good level to short. Let's see it at least back to 117, maybe 116.5 into the FMC. Actually closer to 116.350. But let's see how that is going to work out. Critical levels for now on the majors: $1 117.140, break lower. On cable is pretty close at 135.400. On the Aussie it's 0.66.200, and on the dollar yen it's actually pretty close as well, around 147.550 to 580. To break those levels, the dollar is very likely going to go. On the Dixie, that level is around around 97.750, as I said before. Currently trading at 650, so it's like 10 pips away. On the flip side, break higher, the dollar would actually have to break yesterday's low, which came in at 97.596, close to 600. As I said, trading currently at 60, 6 points away, 6 pips away. The low of the day reached 97.584, just a pip below yesterday's low. Wasn't able to go through, obviously with bond yields not breaking further down. Well, it's very likely to have limited downside. Yeah, as long as bonds are not falling back high again, fading back a bit, maybe $100 a count. That is pretty much it on a day that is pretty low. These 4. What else is there to say? To look at the cut, which came in under quite some pressure in the last couple of days. We have some critical levels to go higher as well again. 138, 680. Trading at 630. So you see the ranges are pretty tight. We're just a couple of pips away from breaking this side. The trend currently is still down on the dollar. We don't have any break higher just yet. We have some sort of fake breaks that didn't have any follow through on the fake side, but instead tested the low side again. So that is not turning around just yet on the technical side of things. On the fundamental side of things, as I said, CPI came in a little bit hotter than expected, which will actually weigh on bonds and support the dollar, but biggest stopper was claims. Came in way worse than expected, but as said before, it's just one claim data, 1 point, and we've seen in the past that there can be 1 week that is quite bad, and then it's pulling back over the next couple. So I will not put too much pricing power into just one weekly claim report. Continuing claims remain solid, they get better, and yeah, would not back too much on the dovish side of the Fed, as we've seen this week already with the NFP revisions. Worst on record, yet price was not able to break any further, but it's pulled back quite fast. So yeah, be careful out there. Gonna be off for